Let's talk some more about the stock and the overall market with Mr. Scott Bauer, CEO of Prosper Trading Academy. Scott, I want to start with Applied Materials, then get your thoughts here about the overall market selling off. Are you interested in trading chips around earnings right now? I mean, can you get some insight into the future from this company still?
I'm not so worried about the future, Oliver. I actually think the future is very bright.
We're living
I think
for
it's
today.
very bullish. I'm living for today. I'm living for a trade. Again, we always talk about the difference between a trade and an investment. This is a trade. Longer term, I'm very bullish AMAT. As a trade, though, what I'm looking to do here is really pick up on what Michael was talking about what that market maker expected move is of about 6.5%, 7%, which puts it just over a $3 move. So there is technically a channel here, a range that this stock has been trading in. You've got the 50-day moving average just below, about $1 below where it's trading right. You've got the 200-day moving average about $3.5 above here. So I'm playing that kind of technical range along with the market maker expected move as a trade. It's only for a trade. So what I'm doing is I am selling this week's, this is going to be a one-day trade, right? Expiration is tomorrow. The 48-46 put spread, selling that, and I'm selling the 53-55 call spread on the upside. So I can do that for about 85 cents. Maybe I can get 90 cents. Vol's picking up a little bit here for about 85 cents here. That puts me at a break even by the end of the day tomorrow at expiration of 47.15 on the downside, 53.85 on the upside. So that is my range that I'm looking for the stock to stay in just tomorrow. Again, just tomorrow. Longer term, I would be absolutely bullish here. I think that the chip stocks in general, even the ones that have pulled guidance, and I expect AMAT to do the same here, have a very, very bright future. But I'm looking at this just as a trade.
Okay, so one more time, Scott, where's the range you're good here? Because with the selling of both these spreads, obviously a huge move, it would not be good for the iron condor.
So 47.15 on the downside, 53.85 on the upside. Those are my break-even points. Anywhere in the middle there, I make money. Now,
about $3.
If it does go outside of that, Oliver, yes, I can lose on this, but I'm stopped out, which is why I only trade spreads. I know what my risk is. So I can never lose, no matter if the stock were to go to $30 or $90, well outside of the range. I can never lose more than the difference between the spreads, which is a $2 spread, both on the downside and the upside, and the amount of money that I've collected, the credit I've collected. So I have $1.15 at risk, but I love the range that I have here again to make money on this thing for a one-day trade.
Scott, this is where I think the broader market conversation comes into play as well, because AMAT could come out, give a positive report, but if we get a fourth day of selling in a row tomorrow, and the equity market decides to finally hit tech with everything else, AMAT could get dragged down $3 pretty easily, even though $3 is beyond the current market maker move. So that's kind of what you're using for your baseline, the market maker move, right, Scott? But there's some macro risk here too.
Sure there is. And look at Cisco, right? I think Cisco had an amazing report. And if it weren't for the environment that we're in right now of the last few trading days, if this were last week when everything was just going up to the upside, Cisco could be up 10% today. It's not because of the macro environment. So, yeah, that is a risk to the AMAT trade as well.
Got it. Scott, what do you think about this pullback right now? To you, looking at the recent run, are we due for a big steep move, or are we just due to shake out some of the recent bears turned bulls and then keep grinding higher?
Yeah, I think it is a shakeout. I'm not saying we can't go down another few percent from here. It is a well-warranted shakeout. And you and I talked about this towards the end of last week as well, that I was really, really bearish on the small caps, on the Russell space here. And I think that we've gotten that big move here. I would look for that to actually level out a little bit here. But I think this is a very, very warranted shakeout, a very healthy shakeout. And I'm not as concerned that we're going to get, another 5, 10, 15% drop here and delve down back towards those lows at all. I think there's some really good opportunity here to start putting some of, anybody that had cash on the sideline back to work a little bit.
Yeah. All right. Scott Bauer, CEO of Prosper Trading Academy. Thanks for the trade and thanks for the macro discussion.